There are investments the government will literally pay you to make, and most people have no clue, no idea. The IRS offers massive tax breaks for putting money into oil and gas, real estate, and renewable energy, not because they're generous, but because they need investors to power the economy. In this video, I'll show you how to use those incentives to legally lower your taxes and boost your returns on investment. So let's think about this. Why would the government reward investments in oil, real estate, renewable energy with tax breaks? Well, let's think about, what does the government want? Okay, always go to, what are they trying to achieve? Well, here's one thing we know. We know that the government wants energy to be produced. Historically, that's been oil and gas. And so we've had oil and gas tax breaks, coal tax breaks for years and years and years, literally like 5 or 6 decades. Recently, of course, there's been a big push towards renewable energy. And so they didn't actually want to take away the oil and gas incentives. They just added the solar incentives and the renewable energy incentives. Now, there's a caveat here, and that is that the solar, the renewable energy tax benefits, they run out. Pretty much they run out at the end of 2027. So you've got a little bit of time, but remember, it takes time to buy it, plan it, install it. So this is something you're going to want to do right away. Let's not forget real estate. That's really the big one. What does the government want? The government knows that people need housing. Why does the government incentivize it? Well, here's an interesting thing. Some of you own your own home. And if you do, part of the benefit of owning a home is that you get to deduct your interest and taxes on your home. But the government actually wants you to buy homes for other people or build homes for other people. Why? Well, the reason is very simple, that not everybody can afford a home. So the government, rather than building the houses themselves, they're very inefficient at it. They do a terrible job at it. It's been proven over the years. So they encourage investors to do it. The incentives are spectacular when it comes to real estate, particularly under the new One Big Beautiful Bill. But here's the thing, it's not just residential real estate that they want built. And it includes commercial buildings, includes industrial, includes self-storage. All of these get included in these tax benefits. And unlike your personal residence that has limitations on how much interest you can deduct and how much tax you can deduct, when you actually buy for somebody else, you invest in rental property, it's unlimited. Why would they do that? Well, because again, that is how strongly they want new housing to be built. They need the new housing. So how can everyday investors legally access the same incentives that the ultra wealthy use? And it's really simply by understanding the rules of their game. Think about why you bought gold in the first place. It wasn't just to have shiny metal sitting in a vault. It was for freedom, security, and long-term wealth. But here's the problem. Most gold just sits there. It doesn't grow. It doesn't pay you. And month after month, you're really no better off. Now, you're no worse off because gold tends to retain its value, but you're not better off. You're not adding ounces of gold. Monetary metals changes that. They make it possible to earn a real return paid in gold, so your ounces grow every single month. Imagine looking at your account and seeing more gold than you had the month before without adding a single dollar of capital. That's the dream. Owning an asset that protects your wealth and compounds it at the same time. So if you want your gold to do more than just sit still, go to monetary-metals.com/CPA and see how your ounces can finally start growing. That's monetary-metals.com/CPA. The ultra wealthy, they do actually have an impact. They lobby for these tax benefits. And, if they get the right congressperson or they get the right senator, then they get the law passed. Now, there is public policy of owning a home. We've got a huge homeless problem. So making sure there's enough housing, especially low income housing. There's special tax benefits for low income housing. Making sure there's enough energy and that it's cheap enough so that we don't have to pay $5, $6, $7, $8 a gallon like they do in Europe. They're available. The key is, if you want to win the game, you have to understand the rules. Right now, you're in the game whether you like it or not. You are in the tax game. You pay taxes to Uncle Sam. You are a partner, or rather, the government is a partner with you. You're going to be a good partner, an active partner, or a silent partner. Okay, well, most people are really silent partners with the government. They just let the government take 40% out of their paycheck. A few, particularly the ultra wealthy, they are active partners with the government. They're actually looking at what does the government want me to do? And if I do it, what are the tax benefits I get? So if you're still investing like an employee, 401k, hoping for 6, 7, 8%, it's time to upgrade. Now, would you rather make a 20% tax-free return or keep handing 40% of your gains to the IRS? I mean, truly, which would you rather have? So it seems like so obvious, but I'm going to give you one more level here. What if I could actually increase my rate of return by the way I invest? So let's say that I'm investing in real estate that would normally give me a 20% tax-free rate of return. But now I invest in such a way that actually reduces taxes on my wage income or my business income. Now I've actually could increase my rate of return from 20% to 30% or even 40%. So wouldn't you rather have the higher return and lower taxes than just being a silent partner and handing 40% of your income and your gains to the government? Now here's a true statement. The wealthy real estate investors almost never pay tax on their real estate income. In fact, a true professional real estate investor should never pay tax on their real estate income. And I'm going to tell you there's two reasons for it. The first is kind of the obvious, which is, hey, the government is giving you incentives, the big one being depreciation. And so, doesn't end up being taxable income. Remember that for an investment like real estate, like a business, you're taxed on your net income, not your total income. Net income is your total income minus your expenses, right? If you're not investing in real estate, if you're a typical employee that's investing in the stock market, you're going to pay tax on your gross income and get very few deductions against that. You're not going to get to deduct your expenses. So that's the first reason. But the second reason is that wealthy real estate investors don't invest once. They make a plan, a strategy to invest over and over and over, because it actually becomes what I call a positive habit or a positive addiction. Okay, I've got to do it because otherwise I'll pay tax. So I'm going to go find that investment that is a good investment first, that reduces my taxes second. Again, I never let the tax tail wag the investment dog, but I don't mind being pressed a little bit to, hey, I need to be thinking all year long about how much do I need to invest this year to make sure I reduce my taxes. That's actually why the government does what it does. That's why they give us these incentives, is because they want us to feel pressure, right? Because nobody likes paying tax. They want us to feel pressure to go out and make the investment. And so they give us huge tax benefits, the big one right now called bonus depreciation. So if you're thinking this sounds great, but where do I start? Real estate is one of the most powerful tax tools, and it just got better. In the next video, I'll break down exactly how the latest tax changes supercharged real estate tax benefits and how to take full advantage before they phase out. Click the video on the screen now to build wealth legally while the IRS helps foot the bill.